big week ahead this week. CPI coming out from the U.S., many meetings from the president of the ECB, Draghi, and also the UK had a GDP release. Let's talk about it here at Capital Markets. Traders, what's up, guys? Welcome back to Capital Markets. It's your host, Cleveland Bishop. Many things on the table this week in terms of fundamental data. So I want to push that out to you guys, all right? So make sure you're subscribed so that you can get all the different releases and video segments that we'll be coming out with this week, okay? And also, if you ever have any questions, please comment down below. We're right here to answer them, all right? So Monday came in pretty strong with Draghi speaking on the ECB meeting that just went down. He had a pretty positive outlook. He mentioned that he has a bullish outlook for the euro moving forward over the next 2 or 3 years. And also he said quantitative easing was working. There are many naysayers that say quantitative easing has destroyed the economy and all this money printing has inflated many asset prices, but Draghi looks the other way. So he really thinks that moving forward, we will see inflation come into the euro and we'll start to be able to raise rates. Right now, they're at a zero rate policy. Very interesting. First time in history. Hopefully they can start raising those rates. We will see a rate meeting sometime in the near future. Let's see if they end up raising. Yesterday was the day for the UK. There was a GDP data release that came out and it was 0.3. That was a month over month data release. So they're tracking the monthly increases in the actual gross domestic product. Now we got to remember retail sales accounts for 66% of GDP, right? So usually you're going to see, if you see a heightening in retail sales, you usually should see a heightening in the GDP release, but we didn't see that much of a heightening in retail sales, and we did not see that much of a move when it came to GDP for the UK. And right now, UK, like many other G10 economies, are looking for inflation and are just not getting it. Right now, the interest rate for the UK is 0.1%. Seems like we're talking about interest rates this week, and definitely they need to see an increase. They want to get to that 2% inflationary target, and even 0.1% is not a normal rate. They need to start heightening those rates so they can start tightening the money supply. They're not seeing that inflation. Now, what's interesting is we have CPI coming out from the US this week as well. On Thursday, we have a CPI data release, consumer price index, that ties directly with inflation. Now, consumer price index has soared much higher than what many analysts has expected, and we actually finally hit back on our 2% target. I remember a few months back where we were hoping to see that CPI came into the US economy. Back in March, I think we were at 0.6, 0.7, and finally we've soared. We're over 0.5 right now. That's a little scary. Right now, there is an inflation of consumer prices, and it's moving a lot more steadily than many analysts and many market participants would have expected. Personally, I do believe that we are going to see another increase in CPI because this economy right now is booming. Now, remember, CPI was the main reason why we are heightening rates right now. That's the leading indicator. When you see consumer prices increase, then that means you have to start tightening the money supply, or consumer prices will continue to increase, buying will continue to increase. That can be a problem, right? So we're going to keep an eye out on that US dollar and the CPI number. Right now, markets are very, very tied up. Here's a quick screenshot of the Euro USD. You can see markets sitting right here in the middle of a very large consolidation. We did hit off on the 0.18s yesterday, but as you guys can see, we have since then pulled back down into the 0.16 highs. Very interesting stuff. So we're going to keep an eye on the technicals over there. And lastly, when it comes to fundamental data, just setting the stage for you guys, we also have a big release coming out for the Canadian dollar tomorrow. That is going to be their rate statement. Okay, so we have another interest rate scenario that could be happening. Right now, Canada's interest rates have not moved so much since the massive amounts of hikes that they were doing last year. Right now, Canada is pretty steady. They probably moved a little too fast, and people are very concerned about their housing market. That's something that we're going to keep an eye on. Make sure you keep an eye out for that number. All right, guys, so look, a lot coming out tomorrow. We're going to be shooting you guys a lot of content detailing the actual chart, showing you guys the technicals in this current market, okay? So again, make sure you're subscribed. And as always, folks, Capital Markets, we are one of the top brokers in the entire industry. If you head over to capital-markets.com, you can get your account started today. We have some of the tightening spreads, which means you'll be paying less and less per trade. That's very important. And we route from some of the best liquidity providers, which means you're filled instantly. Okay, so guys, head over to capital-markets.com. I'm Cleveland Bishop. See you guys tomorrow.